Okay, it's 1 o'clock Central, 2 o'clock Eastern. If you're watching on the playback, it's whatever time it is when you're watching it. But I'm Kevin. I'm the head of community for Sequence, and I'm really excited about our conversation today. We do this community conversation series where I get to spend a few minutes with outside experts talking about things that they know a lot about. And we're super excited to be joined today by Ryan Enos. Ryan is not only a real estate agent and an expert in the real estate field, but also one of the two guys behind the Principled podcast, which I've been stalking over the past couple of weeks, Ryan. So I'll have some wacky questions about that too. But thank you for
Awesome.
being here. I really appreciate it.
Yeah, glad to be here.
Amazing. Okay, so we're streaming this on social, but we're also, for those of you who are in the room, I mentioned this a minute ago before we went live for anybody who showed early, but if you have questions for Ryan, feel free to drop them into chat. If you're watching us on socials, whether that's LinkedIn or YouTube or Facebook, if you got a question you want to drop it in, you can. I probably won't see it until we're done recording because you can't. Um, it is hard to fly the plane and take drink orders at the same time, so to speak. It probably won't be the last weird analogy I come up with today, but that's a start. Okay, so Ryan, I feel like um, maybe we should start with. I mean, you heard my little drive-by version of your background, but I think you can probably do a lot better than I can at talking about your backstory and sort of how we got here. Can you share a little bit about what's going on with you?
Yeah. Well, I'll give you my real estate backstory, and if you want more backstory outside of real estate, I'm happy to do that too. I got into real estate in 2013, and I got into real estate not expecting for real estate to be a full-time thing for me. I was approached by a friend who back then in Texas, you could get a broker's license after 2 years. You didn't even have to do a lot of business, which is kind of scary to think about that. Um, Now it's 4 years, but he had been in real estate 2 years, essentially doing it part time, got his broker's license, and approached me at an event we were at. And he was like, "Hey, have you ever thought about doing real estate?" I was like, "Not at all." And at the time, I was getting a graduate degree and I was newly married. I had a lot on my plate. I was working full time. And he was like, "I think you'd be a good real estate agent." And I was like, "Sweet. What do you, why?" And he was like, "Well, I need to hire my first agent. Just got my broker's license. I need to hire my first agent." And so he gave me the typical pitch. Anybody who's a licensed realtor on here might have gotten a similar one. He's like, you sell a couple houses, like you'll make your money back times four, and pay off some student loans or like whatever. And I was just crazy enough at the time to think that that was a good idea. And so I did. I took my classes, got licensed, and proceeded to sell a whopping one house my first year in real estate part time. But that one house was just enough of a taste for me to go there. I might like this, and you know that was kind of the beginning of a journey for me. So I kind of transitioned out of my full-time career, found a job where I could make a little bit of money just to kind of keep us afloat. Fortunately, I was young and dumb and we didn't have kids at the time, and so we could do that and transition into real estate full time. And that was about 12 years ago. And here we are now. So I've done a little bit of everything. When I first got into the business, I was 25 years old. And so nobody wanted to let a 25-year-old sell their house. And so I was working with a lot of investors at the time, just hustling. Investors make you hustle, whether it be people are buying rentals and trying to learn how to evaluate those. I got really good at that. Worked with a lot of flippers as well, trying to help them kind of understand acquisition costs, got really good at that, understanding the ins and outs of, you know, renovations and numbers and estimating after repair value and selling those listings for far too little now, but I just didn't know. I didn't know things, so I was willing to sell for cheap, and that was good reps for me. And then over time, just kind of built my business organically from there. And so for a short period of time, owned my own brokerage. When I'd been in the business 4 years, I went out on my own, started my own brokerage, built that up to 11 agents. And then in 2019, Compass moved into our market, started kind of buying up boutique brokerages, and I don't know if y'all are familiar with Compass, but Compass is the number one like largest brokerage by sales volume in the United States now. This was 2019, so they came, bought my brokerage in 2019. We moved over, and we've been with Compass ever since. And then, we in our business, so much of this business is collaboration and learning from other agents, and just kind of got to a place like end of last year where a couple things happened. Number one, was realizing that, I've been in this business a while, I've found some relative success, and I have some curiosities I want to explore with agents that are doing this at a high level. And then secondly, I have a decent amount of business being in Dallas Fort Worth area. We have a lot of inbound kind of people moving here. And so a decent amount of my book of business was coming as referrals from other agents out of state. And so me and my business partner, Colin, just kind of took those two things and we're like, let's start a podcast for agents and where we interview the best agents around the nation. That's how Principled came about. So we've been doing that. I think we're on episode 7 or 8 now dropped. That's been a fun journey. And that's how Kevin and I got connected as well.
Yeah, it's great. Well, and it's a fun listen too. Like as somebody who is transparently not in the business, right?
Yeah.
I'm only landlord to my family. That doesn't account either, because usually it feels like the other way around.
Because you're not getting
Um,
paid. You're paying them
no,
to be in your
eh,
house.
yes, in a lot of
Yeah.
ways. But anyway, yeah. So I think one of the one of the things that my naivete probably affords me is I can come at some of these questions from a really unbiased place. And so when I ask is like I think it from my perspective, I would think that if I were either getting into real estate or I had spent some time in the business and felt like I had a nuanced and sophisticated understanding of what's going on, I do think it's very easy, or it would seem like it would be easy to get um, maybe like feel like your the snow globe of your individual metro is, or MLS market is kind of the end all be all. Like how much, and we're in interesting economic times, so it's like, I mean, I guess what I'm trying to ask here, and I'll see if I can simplify this, is how do you balance your sort of large worldview lens with what's happening where your feet are on the ground?
Yeah. Like what would be the reason for wanting to kind of expand out into something like a nationwide podcast when my business is hyper local? Is that kind of what you're getting at?
Well, not really. Like so I think content wise, like I love what you guys talk about, and I will probably continue to gobble it up regardless. But I think what I'm asking is like in business. So like whether we're talking about agents or we're talking about folks who are interested in a side hustle, or we're talking about people with Airbnb properties, or we're talking about landlords, like whatever the situation is, there are the Venn diagram of all of those worlds. There is some overlap, but you're at the center of a lot of it,
Yeah, that's true.
and so I would imagine that it is you always have your DFW glasses on because that's where you live and work. But I know that when we talked about this before, you mentioned that like you have relationships with other agents in other metros all over the country and presumably around the world.
Yeah.
So like, how do you keep your worldview hat on when at the same time making sure that you're putting your best foot forward for the people who live in your area?
Yeah, I mean, I think a lot of it is it's important, when you're trying to hone your craft, it's really easy to get hyper focused on what you know or what you're seeing on a daily basis. And the truth is, even in our business, like real estate agency, different markets do things very differently. And they're considered what's considered very commonplace in, say, California would be considered absolutely absurd here. But they probably have very good reasons for doing the things that they do. And what I've found is by having conversations and having relationships with agents in other markets, and this is something that outside of the podcast is for years and years, I've been a part of, you know, networking groups and things with other agents all over the nation. And what I've found to be true is that a lot of times you can learn best practices that you never would have, run into if you weren't having those conversations, simply because, these things have been distilled in different markets that just think about things a little bit differently. And sometimes there's carryover, sometimes there's not, but it definitely challenges your belief systems about what's just the right way to do things when you come in contact with, other markets doing things differently. I'll give you an example. In Australia, many of you may not know this. It is completely commonplace for homes to be sold in an auction format in Australia. A large portion of home sales in Australia are done just as an auction, versus just setting a list price and letting people come and show it and then bring an offer. Typically here, you don't auction things unless it's a distress situation, right? And we do have luxury auctions, but usually you don't go to luxury auction unless the home has been sitting on the market for a long period of time and they now need to move it. So even things like that, where it's like, well, why couldn't we do an auction? And actually, believe it or not, I'm about to run to a listing of mine that's kind of an off-market type listing, that's for an investor, and we don't have a list price on it. We're floating it to investors without a list price to kind of create an auction format just to see what the market is for it and see if he wants to fix it up and sell it himself or if he wants to sell it to an investor. So, if I wasn't aware of how it could be done in other places, that might not have been even a creative solution that I could offer to my client.
That's really interesting. One of the things that I remember that you and I talked about when we chatted about putting this conversation together was the idea that so many agents are, even if you're part of a larger brokerage, like you are really like you got to get out there and hustle on your own. So, um, let's can we talk a little bit about like anticipating income fluctuation? Like
Yeah.
I'm in Austin, so it's like the peaks and valleys here are crazy. I could see some similarities in the market where you are in a lot of
Yeah.
different places. Like, what do you do to try to anticipate those?
Yeah. I mean, you're right. I think real estate agents in a lot of ways are kind of the smallest micro unit of small business, businesses of one, a lot of us anyway. And so it's, a good year. Let's say you consider six figures in income a good year. And I think for most W-2 incomes, that would be a good job, right? Six figures in income is probably, let's call it 7 to 10 home sales, and that's, if the average sale price right now is 400,000, you're probably talking maybe 8 home sales, you're grossing $100,000 in revenue, right? Well, if that's the case, if you're selling 8 homes to make $100,000, you got 4 months at least in there where you're not collecting an income, right? So you, as a real estate agent, you got to be really thoughtful about how you plan, for your year and how you handle your cash flows. And I think a big part of that, and I'd encourage anybody who's new in the business, a big part of that is just you need to keep cash in reserve. Like, in order to do your job well in this business, you're a fiduciary to your clients, right? That's the number one job of a real estate agent, is to be a fiduciary, which means you're putting their interests above your own, right? Like attorneys are fiduciaries, some money managers are fiduciaries, and real estate agents are fiduciaries. And so if your number one job is to put other people's needs ahead of your own, and you're looking at your bank account and you've got no money in it, you need this sale right now. What are the chances that you're going to be tempted to put your interest first, right? So I think like absolutely number one, you got to put some money aside. You've got to be in a position where you're not desperate for the sale at any moment in time. I think that's good for you as a like just business best practice to do your job well, but I also think it's really important from a business viability standpoint just to be able to manage those cash flows. And for me, it's at least 6 months worth of like all of my expenses set aside. Like that's how I think about it. 6 months, at least 6 months of cash. Um, and I did not go out full time on my own, from being a part-time agent until I had at least 6 months of cash set aside. And that's been kind of a good rule of thumb for me, just in general, in my career, is to have at least that much set aside. I think that allows you to weather the storm. And then if you have a couple months where you're bringing in zeros, yeah, it doesn't feel good, but you're also not able to pay the bills. And so the reality is people expect their income. Like if I get to a certain place in real estate, I'm going to be doing this many transactions a month. That's just not real, and I'll sell between 40 and 50 homes a year. And I didn't close a sale in January this year. Right. And that's just real life. So there's not necessarily a point in time when that's not going to be the case, and it could be 0, 0, 4, 3, 10, that's just the way it is. And so I think you always need to be planning. I had my wife's uncle is a home builder in the Colorado Springs area, and he weathered the 2008 financial crisis when a lot of his competitors went out of business. And they came out of it on the other side really well. And I was sitting down with him one time and I was like, dude, how did you anticipate that? Like, what did you do? What was your secret? And he said, it's really simple. When things are good, I plan for when things are bad. And when things are bad, I plan for when they're going to be good. And I just think that's a good rule of thumb, especially for real estate agents with variable income.
Well, it's also one of those deals too. I would imagine that this would apply in a business sense as well as personally, but it's like when you automate some of the like just setting some money aside for a rainy day or for whatever weirdness happens in life, like we can all get by on a little bit less than we think we can. At least that's been my experience. It's like, you don't really miss it. And it's also the super nerdy term is hedonic creep, which is that lifestyle expansion that happens when we start making more money. So I really love the analogy of kind of the equivalent of buying low and selling high, or keeping your eye on the other side of the pendulum, uh,
Totally.
contingent on how it's going. That's crazy. It's
Well,
really interesting.
well, and as we're sitting here, talking about all of this, and obviously we're talking about Sequence, which is who you work for, and I use the service, and I'm a big advocate for it now. I actually, for those who are watching, I sought Sequence out because I was like, I've been looking for this for years. Like, where have you been? You're finally here. Like, I finally found you, because of this very reason. Like, when you're in the weeds of your business and you're, as a real estate agent, or a small business just in general, you wear a million hats. And so the one hat that I have the hardest time putting on is like, okay, I need to like get into my finances and figure out where all the money's going and make sure I'm setting aside money for taxes. And okay, I've got all my money. Because historically, even the best of us, I think most of us just have like a business bank account. Everything comes into the one bucket and goes out of the one bucket. And so all you do is see this one number on a screen. Well, that doesn't really tell you a great story, nor does it allow you to kind of be accountable to where you're letting that money go. And so, gosh, I don't know how many times in my career I've gotten caught at tax time, and I'm just like hoping and praying that my accountant's going to tell me that the number I owe is not something super high. And a couple of times it has been. And I would set aside money in anticipation of that, but I had no way to kind of, know what that was going to be. And I'm just hoping that the amount that's in this account is enough, right? What Sequence allows me to do is go, okay, I can look back, and if you're early in your career, this is going to be harder to do. But because I've been at this a while, I have a decent idea of what things have been like over the last few years, and I can go, okay, these are my expenses. Generally, this is what I spend on marketing. This is what I spend on payroll. This is what I spend on taxes generally. And so every month I'm shuttling money into these accounts. That's kind of a prorated amount based on what I'm anticipating those to be. And then I can see that what I do is I can see every year what percentage of my income goes to kind of each of those buckets. So I have a pod to keep it pretty simple. I have a pod for payroll. I've got a pod for owner distributions. So basically, like how I pay myself a W-2 salary, but then I take distributions. I got a pod for that. And then I've got a pod for operating expenses, right? Which would include my marketing expenses and like overhead and all that sort of thing. And then I have a pod for profit. So I take 10% off the top of everything I make. It goes into the profit category and just like out of sight, out of mind, like set it over there. Um, oh, and taxes, right? And then I basically know what my percentages are based on, I can look at my taxes over the last few years. I look at my books because I have a bookkeeper who takes care of my books. And when that income comes in, it splits by percentage into all those categories. And some of those have a cap because you can put rules. Like I know my payroll, what my payroll is going to be. It's a fixed amount. So once I hit that cap, then it shuttles everything in distributions and profit, right? So like I have a general idea of like what those numbers are going to be, but I know my payroll is not going up unless I hire somebody new. So once I hit that payroll cap this year, it no longer fills that bucket anymore, right? These are things that I just couldn't do before. And so it's been a really helpful tool because the truth is like we all have the best of intentions for our finances, right? It's like anybody that's ever done a personal budget, it's like you start with the best of intentions. It's the executing that's hard and being consistent. So if I don't have to depend on myself to do that anymore, if I can just like, okay, I'm going to sit down one time at the beginning of the year, I'm going to look back over the last year, see where my allocations need to be, and if I need to adjust my rules. And then I just go in, I adjust them, and then I'm like, I don't have to think about it anymore. Like it just happens automatically. That is a really big blessing. And also I don't have to pay somebody to do it. So it's like it's a very, very small expense for me relative to what I can't hire a CFO, right? I'm a super small business. I don't have the means to do that, right? So I kind of have this like automated CFO for myself, which is really nice.
It feels like almost like an escrow situation, right? Like, so
Yeah.
you're taking that whole out of sight, out of mind thing is so real, and it's
Yep.
like the momentary panic I have when I get my note at the top of the year that says, "Oh, here, by the way, here's how many thousands of dollars you owe. Uh, hope you've got everything covered." Now, fortunately, we do, and it's like not painful at all because we set it aside incrementally, like you're doing.
Yep.
But it can be stick. It can really feel like a sticker shock situation
So,
otherwise. Um,
so that's,
Go ahead.
but not to cut you off, but I do that
Yeah,
as
you're fine.
well. So,
Yeah.
so as a business owner, one of the things Sequence allows me to do is I can set up accounts that are business accounts and personal accounts. So I have my business account. Well, then I set up a personal account that's called property taxes because I don't escrow my property taxes. And the reason I don't, because I know there's arguments both ways, the reason that I don't is because I want to stay on top primarily of my homeowner's insurance because I'll just forget, it's like it's getting escrowed and they're just going to continue to increase my homeowner's insurance every year. I'm not going to keep an eye on it. So I have my homeowner's insurance paying monthly, and then I set aside a prorated portion, have Sequence do it every month for property taxes. So I know when it comes due, it's there. So it's escrowing for me, but I'm not making the bank do that for me.
Yeah, totally makes sense. I do want to take a second for a quick sidebar, just to remind all of you guys, if you joined us later, if you've been sitting here and hanging out, um, if you have questions, just drop them into chat, and we'll pick them up as we go. But one of the things that I wanted to make sure that we at least talk about a little bit is the idea of, because we mentioned not only is that are we talking about real estate agents, but the reality is that like the real estate market is divided up a lot of ways. There was, again, just using the example of the market where I live, there's been a lot of talk about ADUs and granny flats, and Austin's getting crowded, so they basically changed how many units you can put on a single parcel of land.
Yeah,
And
zoning
so it's,
changes.
yeah, all that kind of stuff is really interesting and kind of easy to get in the weeds on. But for people who are landlords, or who are interested in looking into real estate opportunities, what advice would you have for those guys, just in terms of uh, getting comfortable, putting your best foot forward, at least trying to stay informed?
Totally. I mean, gosh, I think well, and specifically as we're talking about like managing cash flow, I think one of the more complicated parts of my life is like the managing rentals and doing taxes for those. We own a couple rental properties. And once again, things that I didn't do a great job of is staying on top of the finances, even as it relates to rental properties. Well, I can create a bank account for each of my rental properties. Like that's a really nice thing to be able to do. I do think for those, let's call it landlords. I think the being proactive in your finances as a landlord is super important, and especially as it relates to taxes. One other piece of advice that I would say, just because I deal with a lot of investors and have invested myself, is like you've got to have a really good CPA in your corner. Like I cannot urge that enough. Um, and not every CPA is created equal. In my mind, you've got kind of a general CPA that works with W-2 employees, and then you've got a CPA that's familiar with small business, right? That's another one. And then really for you, if you're a landlord, you need a CPA that works a lot with real estate investors, because the tax benefits that you can take advantage of as a landlord and a real estate investor are good and important, and you need somebody that's fluent in that, because you can leave a lot of money on the table if you don't know your way around that. And I'm in real estate. I'm not an expert in the tax code, because the tax code is a million pages. So you really want to seek out somebody who knows their stuff. And then lastly, I would say there's a difference between just a tax professional who files taxes and a tax strategist. If you can find a tax strategist, find a tax strategist, because tax strategists, they're not only going to file your taxes, they're trying to save you money. So they're trying to help you kind of think in advance, like what direction's your business growing? Here are ways that we can allocate your resources to make sure that you're maximizing your tax benefits and your credits and all that sort of thing. I started working with a tax strategist a few years ago, and is a game changer, especially for those of you who are, making a pretty solid income. That can really put a dent in your tax bill. So anybody that I'm talking to about real estate or real estate investing, the tax piece is vital. It's so important.
Yeah, I can only imagine. I mean, it's like it's an entirely different language, and the people who speak it well are so valuable. Okay, so I want to ask about, this is financially related, but not exclusively. One thing that also strikes me about real estate and any of the buckets that we brought up here, I think this applies, is like it can be really competitive. So, how do you deal with or manage the challenges of competition and trying to put your best foot forward? I mean, we bought my family home a billion years ago, and I remember even at that time, like we wrote a letter, like it was one of those situations where there were competing bids and we tried to put our best foot forward. It's a weird little anecdote, but like, how do you deal with competitive marketplaces and I assume
Yeah.
that some of that has to do with fiduciary responsibility, et cetera.
Yeah, I think there's two aspects to that question, because it's competitive, like industry internally, like agent to agent. It's a competitive industry. Like you're vying for, listings and like clients and that sort of thing. But then, like you said, it can be really competitive. Like good homes tend to create competitive atmospheres. I think a lot of it has to do with like the bringing value and thinking through the lens. Like anytime you step into a competitive space, it's like you need to be the one who's bringing the most value. Like I think those who bring the most value are going to win, whether that be, you know, hey, I'm one of five professionals that are sitting down for a listing appointment with the same seller, or my clients are one of five offers that are being brought to somebody who's selling their house. Um, you you have to put yourself in the shoes of the person who's on the other side of the table, so to speak. And if you're in a competitive scenario, at the end of the day, it's not about you, right? Like you have to really be able to go, okay, what's important to the person that I'm talking to here? Whether it's like important in an offer, and obviously if it's an offer, we're talking about price. But I always tell people, don't forget, sellers are asking two questions. How much money am I going to make, and how sure am I that I'm going to get it? And that's all terms. Like you got to know your way around a contract. Same with a listing, like a listing presentation. If you're one of five agents sitting down for a listing presentation, you got to be a good listener. Like you don't want to just assume what the seller cares about, right? Like you got to ask good questions. You got to figure out what it is that motivates them, what they're really trying to accomplish, because not everybody has the exact same motivations. So I really think like being a really curious mind and asking good questions and trying to get as much information as you can and context for the situation is going to make you the most successful in any competitive scenario. And I think that's really the key. Like the person with the most information and the person the most willing to bring value is going to win.
Uh, Strong listening is a asset in a billion different industries, and it totally makes sense that it would be the same here. You mentioned something earlier that I want to briefly circle back to, and you talked a little bit about how when you started, you were essentially treating real estate as a side hustle. You weren't necessarily, you hadn't pushed all your proverbial chips to the middle of the table, but obviously that's changed. Like what so if you're somebody who's watching this and you're curious about whether this is something that you should dabble in and maybe try to make some side hustle money on, or whether it should be a bigger part of your professional life, what advice would you have for those folks who are maybe on the fence?
Yeah, I mean, I love to have that conversation. I love what I do. I feel blessed to be able to have a career in real estate. I really love it. I think the other side of that coin is you got to count the cost. Like I think it's really important for people to understand real estate is a great career and it is a hard career. And I don't care what, form of real estate you're planning to do. Whether you want to go, in as an investor or you want to syndicate or you want to be a wholesaler or a flipper or whatever it is, it is challenging. And typically like the first couple of years are going to be hard. The learning curve is steep to be good, just like anything that's worth doing. And so I think it's important for people to really grasp like this is not a get rich quick scheme. Like real estate is not just in general. We're talking about big assets. Typically, real estate, you win on real estate in the long term. So you got to be in it to win it and be willing to be geared up for a long time. So you need to make decisions early on, like with that in mind. Where I see people fail in real estate is they get into it, and obviously I started as a side hustle. I'm not taking my own advice. I wouldn't point to myself in year one and go, yeah, do what I did. I think I lucked out a little bit. I also think I was maybe just naive enough to stick with it and be in a position to do that. But I think a lot of people think it's going to be quick success and they're just going to crush it year one. And, I interview real estate agents all the time now. That's part of what I do for the podcast. Most of them did not see immediate success. Like we just released a podcast episode yesterday, and there's an agent out of Chicago, her name Haley Westoff, and she's one of the top agents in Chicago. And I think she said she sold like one or two homes her first year. So I mean, the reality is like you got to be geared up and be ready to be humble. You got to learn a lot. You got to like dig in and get good at your craft. And know that it's going to take a while. But what you can do if you're willing to learn and really hone your craft, you can create a really good living in this business. And you can create a great moat around your business because guess what? Most people aren't going to be willing to like put in the time to become an expert. And if you're willing to put in the time and the reps to become an expert, like that's rarefied air in my book, just like in anything else. But
Yeah, it totally makes sense. I listened to a little. I haven't finished that episode, but I did listen to enough of it to hear her crazy client stories, which were fascinating. I won't make you retell those, but
yeah,
it was a great listen.
yeah, y'all
Um,
listen. It
uh,
was good.
yeah, it was really good. So anyway, yeah, I guess other than that, like I have a couple more questions, and I do want to just put it back out there. If you guys are hanging out and you want to ask a question of Ryan, we have him cornered for a minute, so now's a great time. But um, okay, so let's talk a little bit about negotiation, right? So like that's definitely got a financial aspect to it. Like
Yep.
what had I and it sounds like you've gotten better at this over time. Totally makes sense, right? But what have you learned there, and what do you wish that you knew with regard to negotiation straight away that it's taken you a little while to get your head around?
Love this question. I love negotiation. I would consider myself a little bit of a nerd on the topic, and I was awful at this at the beginning. Like, poor every person that worked with me the first maybe 2 years in this business. Like, I should buy them all dinner for all the things that I didn't know that I didn't know. Um, I think negotiation it's as simple as what both parties are willing or not willing to do. I think if you boil negotiation down, all it is two people come to the table. telling each other what they're willing or not willing to do, right? And then you got to sort through like what's true and what's not, right? So, where I think people get mixed up on negotiation is they think it's their job to convince the other person that they're right. That is never like it never works that way. And it is the number one way for you to not get what you want. And the reason for that is simple. People don't want to be told they're wrong, so they get defensive, right? If you want to negotiate with somebody, you need to come in collaboratively and you want to create you're trying to create creativity and like a win-win scenario, right? So and even if obviously your goal is to get what you want, right? But the goal is not to put the other party in the defensive. So I'll give you a for instance. And what I do, the first part of the contract is like price. The second part of the contract negotiations is once we go into contract, we get an inspection done. And then we've got this long list of things that's wrong with the house, right? And so let's say I'm on the buy side, I'm working for the buyer. I could go to the seller and go, we want $20,000 as a credit, and we want it because this and this and this and this and this and this are wrong with your house. And that's one way to do it. Or we can go, hey, listen, we want $20,000 off the price, and or else we're going to walk. Which one's a stronger position? Now, it's not to say that I will do it that firmly. Most of the time we don't. But if you're on the sell side and you just see it $20,000 with no explanation and the person's willing to walk, like what's your instinct, right? Now it depends on if you have another like a backup offer or not, like all of that factors in. But if I come to you with a laundry list of all the things that you did wrong with your house, and we want it because the paint is orange and it's not green, or now all of a sudden it's gotten personal. And in my experience, the less you say, the better, right? Because you're not giving the other party something to latch on to and disagree with. As soon as you get somebody latching on and disagreeing with you, now they're not in problem solving any mode anymore. They're in defensive mode.
Yeah.
So that's one thing. And then, I love Chris Voss. Like he wrote the book Never Split the Difference. It's a great read. And he talks about tactical empathy, which is essentially like, once again, comes back to asking good questions. But one of his tactics is if you're in a negotiation and somebody, you know, let's say they're making a request, and one of the ones that we run into a decent amount, let's say I'm on a listing appointment and the person I'm across the table from is like, hey, I want you to list my house, but will you sell it for a discounted fee? So he would say, I just respond, discounted fee? You just reflect back the last two words they say with the question, discounted fee? You don't argue. And so now the person feels like they have to like justify what they just said. So then
Oh, sure.
they're going to speak some more. And they speak some more, and then you reflect back to them again. And then all they've done is basically like wound themselves up, and they've undermined their own argument, and you haven't actually had to do anything. So I think that's a great one too, if you're in like a verbal negotiation. So once again, I think a lot of it has to do with that would be tactical empathy. The other thing is just don't get them on the defensive. Try to stay in that like problem solving mode. Don't give them too much to latch on to. And then the last thing is like the person with the most leverage is the one who can walk away, right? So you want to maintain that, like, don't come in and let the other party know that you're like, oh, we love this house, or like, gosh, it's like you've got to maintain like a sense of indifference, in order to maintain leverage.
That's really fascinating. I This is a very different situation, but it reminded me of I listened to a conversation with like I don't know if it was like a hostage negotiator or some sort of police officer who was talking about de-escalating really tense situations, and the tactic that they would use would be like you get your point across in saying like here's the action that I need you to take, but then you soften it with like sort of counterpoint where like I could see if I were in your situation how maybe I might have interpreted something this way, and it immediately starts to relax the person that you're having a conversation with. Obviously, not this not one to one uh, allegory, but I would say that because the transaction sizes are significant, and a lot of times when you're talking about moving houses or real estate properties, it feels like a big deal. So I'm sure that those are can be charged, and it's nice to be able to let them breathe a little.
Yeah, and sometimes it's as easy as finding a point of like commonality, and just going like, hey, I know this is stressful for your clients. Like I know they've got 3 kids and it's hard to move. What if we gave them a few days lease back so that they have time to move out? Like those little olive branches, they might not be things that your client cares that much about, but it might mean the world to the other party, right? So there's like if you can find ways to bridge the gap, sometimes you can make headway when you're at an impasse.
Amazing. Okay, so we have gone on for a while. I'm not gonna harass our listeners to make sure that they ask questions, but you can if you have any. Um, Ryan, tell everybody where the best place to find you is, and I'm also going to type in the name of your podcast for those who want to check it out.
Yeah.
And it is a good listen. I really enjoy it.
Yeah, if you're in real estate or you're an entrepreneur, I'd really would love for you to check out the podcast. It's called Principled, and it's a play on words. It's Principled, Principaled. A principal agent is what they call like a team lead in real estate. So Principled is the name of the podcast. We interview the top 1% agents all over the nation about how they built their business, kind of in the same vein of like a How I Built This, if you ever heard that podcast. You can find me personally on Instagram. It's Ryan A. Enos, Enos, on Instagram. I'll be honest with you, I'm not the best. I'm not the best follow on Instagram, but social media is not like my thing. But if you want to have a conversation, you can find my information online. Always happy to chat. Yeah, thanks for having me. I hope this was valuable.
Oh yeah, amazing. Thank you so much. I appreciate it. Thanks everybody for stopping by and keeping tabs on what we were talking about today. Ryan, I know I learned a ton. I'm basically slightly dangerous now with the new level of information that I had 45 minutes ago, but really enjoyed it. I'm going to send a short survey to all of you guys who were in the room just to make sure that we can continue to iterate and improve these and that we're serving you the best way. Would love your feedback. And then I'll also send around the recording once it compiles, which usually takes an hour. So in the meantime, Ryan, thank you so much. If you see my in-laws in your neighborhood, tell them I said what's up. And I'll look forward to catching you guys next time. Have a great rest of your day, everybody.